Scott, what's happening with GTN? From what I can understand, there is a return of capital of 23 cents per security. The shares have dropped by a similar amount. Why are they returning capital? I can see it was voted on, but what's the goal behind this? Shareholders wanting money. Isn't that the goal behind capital return?
Yeah, look, I
Gimme,
don't
gimme.
I don't know for sure what it is. I read some of the papers around the extraordinary general meeting that was held recently to vote on that, which was approved. It looks like it comes down to the best use of equity versus debt. It's the old weighted average cost of capital question. And so if you look at the company, first of all, GTM pays out 100% of its profits in dividends, and they do that because they claim they can't find a better use for the money. It's fine. And so it's trading on a high yield. And therefore, to pay out the dividend, that's costing them 6 or 7%, whatever the number is, I'm not sure offhand. Whereas if they take out debt at a lower interest rate, then it's actually costing them less. So they return the capital back to shareholders. And I think what will probably happen is they'll reduce the dividend, but I can't guarantee that. But that's the argument anyway, is that it's costing them more to pay a dividend now to shareholders than it's costing them to borrow money to fund the growth of the company. And so they're basically borrowing capital and returning it as debt, even though it's two separate transactions and the amounts are slightly different. I think they're returning about $44 million and they're borrowing about $35 million, something like that. So that's the thinking behind it.